Hello everyone, it's very nice to be here with you today. Today is the 11th of October 2023 and it's Wednesday. As some of you might already know, my name is Phil, I'm with Pragmatic Trading and I am very happy to be here with you today. So, how are you guys? Are you having a nice day? Because I for sure am having a really nice day. So, this will be the first part of a new video. My idea is to record a video which will be made of two videos. The first video, which I'm filming right now, is the PPI video, and tomorrow I will record another one, the second part, which will be the CPI video. So if you open my YouTube channel, you will see that my first video on my channel is about trading the volatile environment, trading the FOMC. So now I had an idea to make a video where I will try to teach you how to trade or to avoid trading in a volatile environment. So we have the news, the PPI readings in 6.5 minutes. Before we go there, before that happens, I would like to explain how did I get this short entry, okay? So I have a short entry, it's currently sitting in profit, let me find its actual short position. Alrighty, so how did I get this target? Well, we'll talk about it. But first, in my tweets last night and in my first weekly analysis, I have talked about this, this situation here. So if we lose, okay, if we lose, and we are losing this support, which was resistance before, we might have a violent move down. That happened earlier than I expected, okay, I have to admit. And what did we have there? Well, we had the infamous 27.1, 27.2 area of support. We had the value area high of this whole range here, right? So this is a very important zone in the charts and in this range here. We lost it last night, but I can't say we lost it for good because we have to confirm that as resistance before we want to be sure in a bearish scenario. So we have 6 more minutes. Let's go back to this target here. So in my first video on my channel, I have talked about trading the volatile environments, right? And one of the things that I said is that the worst thing you can do is to trade during the news. So it is 2:25 p.m. The worst thing you can do is to enter a position at 2:30 during the readings. Why? Well, many people, mostly gamblers, will enter positions. The market will go crazy, okay? There will be madness all over the charts, as you will see in 4.5 minutes, and that is the worst place to enter a trade. It is best to establish your targets, zones, etc. before the news happen, before you get the readings. Why? Well, let me explain. What do we have here? First, we have the minor. Let's start with the major scalp pools, or even better, let's start from the anchored volume profile. This is the volume profile of this range here that we've been for a while, right? And what can we see? We see that we have used its value area low as support and we lost it last night. So when we lose the level, price will naturally, or an asset will naturally come back to that level of support to retest it as resistance, okay? So that is the first zone or point of confluence we have. Okay, let's memorize that. Let's leave it on the charts. Let's go back to the 1-hour chart. So here in this little range here, what do we have? We have some price action that we can use to measure the upwards potential of the move that could happen. So let's go one by one. First, we have a minor scalp pool from the local bottom, right? And what do we have? We see a fib web, important fibs a little bit below the value area high. And what do we see immediately? We see that this asset, Bitcoin, has struggled to reclaim those levels as resistance, right? So we have the value area high, we have these fib levels. Now let's turn on the major scalp pool, local bottom, we see more fibs in the zone. Okay, what else do we see? We have the major fib retracement, and no wonder the first fib level of interest was exactly at the top of the wick. Okay, besides that, we have the minor fib retracement, nothing too interesting. We have this level here, but it's nothing too important. We have the minor fib extension. Oh, look at that, look at that. We have more fibs in the zone right here near this major fib retracement pool. So why is that interesting? Well, you have the value area low, you have the context, okay? The previous support is becoming resistance, right? So you have the context, you have confluence, you have the value area low, you have two scalp pulls, major and minor, you have the fib retracement, major fib retracement of the whole range, okay, from the very top here to the very bottom. And plus we have the fib, I'm sorry, I am a little bit excited and I shouldn't be. Yeah, we have the fib extension. So what did I measure with this fib extension? Well, it's pretty easy. I measured the potential, the upwards potential of this wave up, right? So 1, 2, 3, up. Now, those are the reasons why I have entered the short there. Currently it's sitting in profit, but I don't know what's gonna happen because we have the news in 1.5 minutes. Now, before the news, I would like to try and show you how you can maybe find a zone that's worth the risk. So I have down local targets. What did I measure here? Well, first, let's go back to the 30 minutes chart so you can see it clearer. What do we have? Let's go one by one. Okay, one by one. Let's start with this one. We have the major fib retracement from this bottom to the top. Okay, we have these zones. Now we have a smaller fib retracement. So this is a scalp pool. What am I measuring here? I am measuring the downwards potential of this last wave up. Okay, so basically I'm measuring this, and I already see some zones of interest. 27.125 and 27.9 approximately. Besides that, I have the trend-based fib extension, which lead me to the same place, and this is why I put this rectangle here, because I believe one of these two zones, this one here or this one here, could produce a bounce in case we have a downwards move during the PPI, right? We don't know what's gonna happen, of course, but it is what it is. And there we have it, the PPI. Let's enjoy it, let's remove all of this one, and let's see the madness, right? Let's enjoy the madness. I hope you prepared some coffee. I hope you realize why I say do not enter a trade when there are news, okay? Always enter a trade before the news or after the news when the things cool down, right? Why? Because if you enter a short or a long, you will most likely get liquidated. So where is it? Forex Factory. It's a nice little website where you can see the readings. The core PPI is higher than expected, as well as the PPI month to month. So this is good for inflation and bad for the markets, and that's why naturally we have this reaction. Okay, so once again, the key points you need to take from this video is, if you want to trade the volatile environments, it is best to establish the zones of interest before the news come. Okay, and I told you before, the news are irrelevant in a sense that they can't liquidate you if you know what you're doing, okay? They can't liquidate your position. If you are confident in your targets, oh, we had this imbalance here, look at this, I didn't see this, beautiful. So if you have your zones of confluence, if you know what you're doing, if you have your targets, it doesn't matter when will an asset come to your target. Sometimes it will come before the news, just like today, and just like during the FOMC. Sometimes your entry will be triggered during the news, but it doesn't matter, okay? Zone is what matters. Timing doesn't matter, because it's not that you will always get the perfect timing for the trade, right? So you have to work with what you have. Now let's look at these down targets. I'm pretty sure we can bounce a little bit here. Yes, no wonder. I've done a live analysis. Okay, I didn't do this before the video. Yes, I might have prepared these pools, but you can see that we are perfectly bouncing from the zone here. So I have partial take profit in this zone on my short. My short is still open, actual short position. It's still open, but I have the partial profit, take profit here. I think I'm maybe taking 20-25% off the table in this zone. So there you have it, guys. I don't want to take a lot of your time. I want to make this a short video. I do expect some kind of a bounce here because you can think about it. Many people have shorted this 5-minute candle, and I can bet some of them or all of them will get punished before we keep going down, and if we are going to go down. Okay, maybe we'll just bounce here and we will keep going up to get to a new high. I have targets at 27.4, 450, etc., and that is exactly why I'm securing my partial profits here. Okay, so this is it, guys. It's pretty simple. I mean, it looks pretty simple when you know what you're doing. It looks pretty simple. You have different pools, you have the volume profile, you find the confidence, you find the target, you think about the context, and you think through really well, and you try to trade that. Okay, so I think this is a very useful video. The first part of the video, the PPI. Tomorrow I will make the second part of the video, and I will publish both of the videos tomorrow. It will be one video with 2 merged videos in it. So please, guys, if you have any questions about the CPI, PPI, trading the volatile environments, about any pools that I am using here, feel free to post a comment. Okay, and of course, if you find any value in this first part of the video, please consider liking this video, okay, subscribing to my channel if you want to see more, and of course sharing with someone that also might find some value in the video. So I wouldn't lose any more time. I've talked about the possible outcomes. Of course, yes, we can take these lows today if this reaction continues, but of course we will have a choppy area before we continue down, if we are going to continue down and take these lows. At the same time, all of these people who shorted, who didn't secure their positions, can also be punished, and the price can make a higher high before continuing down. So for now, my bias remains to the downside. That's why my short position is still open, and I wanted to secure my position, so I've taken profits partially in this zone, previous resistance, which could become a support. I wish you a nice day. I hope you didn't get liquidated in this zone here, and I hope I shared some useful advice with you. So this is the end of the first part of the video. I'll see you guys tomorrow. As always, pragmatic trading loves you and wishes you all the best. See ya. Greetings, everyone. As some of you might already know, my name is Phil. I'm with Pragmatic Trading, and I'm very happy to be here with you today. So today is the 12th of October 2023. It's Thursday, and today is the CPI day. So if you're watching this video, you are probably realizing that this is the second part of the PPI CPI trading video. I hope you enjoy it. I'll share everything I can share with you, and I hope you find some value in this video. So we have 10 minutes until the CPI readings. Our website is ready. We will be able to see the readings here. So what do we have in 9 minutes? We have the core CPI month to month, we have the CPI month to month, and CPI year to year, as well as the unemployment claims. So yesterday it was a very volatile and an interesting day. For me, it was a very profitable day, and I made the first part of the video that you will be able to see inside of this video, right? So what had happened yesterday? I will jump back to my Twitter account for a moment and I will show you this. So What did I have to say? Well, we had a breakdown of the range support. This was the range support. Now we're going to short the value area low, retest, and the first fib level above. That's a structural retest too. So I have had some beautiful confluence in the zone here at 27.321, yeah, $27,321, and I posted this setup before it happened. So when did I post it? I posted it on 11:18 a.m. in the morning, so that was approximately 2 hours and 40 minutes before the PPI readings. Now I will talk about the key takeaways from this video about trading the news, trading the volatile environments, but as you already know, because I have stated that multiple times in this video and in my previous videos, if you want to trade the volatile environments, timing is not what matters. What matters to you is to have a clear range established, to have clear targets, and to have a context, right? To have a context to know what might happen inside of the context that you have. So I have posted this setup before my limit order was triggered, and what was the outcome? Well, the initial outcome was that before the PPI my entry was triggered. You can see it here, yeah, inside of this wick. I would call this a precise entry, and here we see a bigger view of the range, the breakdown of this previous resistance, which was support. And what was the final outcome? Well, I've closed this trade at 26.7 to 100%. Not bad for a single trade, right? It played out pretty quickly in a few hours, so that's what I wanted to see, and that's exactly what happened. So you will be able to see that in the first part of this video. If you haven't watched it, I suggest you to go back, rewind this video, and see how did I get this zone exactly. Now, let's go back to the future, or let's go back to the present. What do we have now? Well, we have the same volume profile of this range above, which started here, right? We have retested the value area low. That's where I entered my short. I exited my short here in the area, and that's what I call a good minor swing, a good scalp, whatever. Now, things are getting tricky. I expected the market to look forward to seeing positive readings from the CPI, but it seems like many people were liquidated and stopped out yesterday, right here in this range. And I think that's one of the reasons why market is not overly bullish inside of this zone. Now, I have some long setups below, but currently I'm not interested in taking those. Okay? If some of you are, if you have an established range and established targets, well done. I don't have them for now. I am not interested in longing this zone right here. That might be a bad call, but never mind. What am I interested in? Well, I am interested in shorting this structural retest and this zone here in case we have a quick run up during the CPI and in case we keep going down. So I am interested in taking a continuation trade. Why continuation? Well, the current trend is downwards. I want to see it continuing. So if that happens, if Bitcoin decides to stop hunt, to liquidate these highs, I will make sure to have entries here so the trend can continue along with my trade. Now, we don't have much time. We have 4.5 minutes, or 4 minutes in total, so let's focus. Let's turn off this anchored volume profile. I have 3 short setups, okay? All of them have a very, very tight stop loss or invalidation level. This is the first one. Entry is around 26.9, so it's a little bit above this wick. If that short gets stopped out, I don't care. I have another one higher, a little bit higher. Entry is at 27.02, and the third, the highest one, is 27.1. So those are the three positions that I currently have limit orders. How did I get them? Well, let's be precise, let's be concise. First, we have the fib extension of the range, right? What do I measure here? Well, once again, I'll show you. We are measuring the upwards potential of this swing. Okay, so it can go here, it can go higher, etc, etc, etc. Besides that, what do I have? I have a scalp pool of the range. Okay, so I am measuring the upwards potential of this move down, right? The first level of interest is at 27.28, and if we switch back from log to non-log chart, the targets are a little bit different. Let's be more precise. Let's put it here. Okay. Now, besides that, you can see that we have many highs, right? Now, different traders or different people use fib retracement in a different way. First, I have the major fib retracement from the very top to the very bottom, or let's say the current bottom, right? And what's interesting about it, the first fib level is around 27K, 27.01 or 27K. Besides that, I have the middle fib retracement from this high to the current bottom. Okay, what's interesting about it? Well, we'll see. Let's open the minor fib retracement. Okay, that's the fib retracement from this top to this bottom. Okay, and we have the most recent one from this high to this bottom here. Now, I know that this looks messy, but once you get used to using fibs properly, this will not be messy because you exactly know which level is derived from which fib retracement, right? Now, I have these entries here. I will put the rectangles. Give me a second. So the first entry is a little bit above. Okay, this is where I expect a rejection, some kind of a rejection. The second entry is here, where these two fib levels meet. It's pretty clear, and at the same time it is a structural retest, right? And the third entry, if I'm not wrong, is around this zone. Alright, now besides all of these things, I will turn them off for now, and I will use this tool, give me a second, fixed range volume profile. So I want to know what is the volume profile of this range. What is interesting about it? Well, we can see that we are above the value area low. We are pumping before the CPI. I have to be faster, and the point of control is between two of my entries. Let's measure the volume profile of this whole range. Oh, look at that, the value area low is within one of my entries. So let's take a look at the CPI, let's see what happens, and let's enjoy the show. I have my levels, I have my targets. If I don't get them, I don't care. Why? Well, yesterday I shorted this one and I exited here, so it can't get better than that. I simply don't care. If we go lower, fine. CPI will come out in 3, 2, 1, let's go. And we have the initial reaction. And this is one of the key takeaways from this video, right? Do not, I repeat, do not enter a trade during the news. When I say during the news, I mean 10-20 minutes before the news or after the news, because an asset will do this to liquidate everyone, right? Usually when the market is overly bullish, an asset will try to break the highs, right? If that doesn't happen, if we have bad PPI readings like yesterday, people are a bit afraid to enter the longs, so we have this wick down. Usually, if you backtest every single CPI and PPI in the past 12 months, you will see that most of them, like a big majority of them, was bullish. And what does it mean? Well, it means that an asset, or Bitcoin, Ethereum, whatever, always tried to go higher during the CPI, and then it had a nasty rejection, and that's exactly what's happening now. So let's see if we will get some kind of an entry here or not. Now, while Bitcoin is doing its thing, let's talk about the key takeaways from this video. Okay, let me remove the background, let me remove the border, and I'll do this. So what are the key takeaways or key points from this video. Okay? First, do not enter a trade during the readings. Okay? Why? You will get liquidated. Okay? You will get stopped out no matter how good you are. Number 2, timing is irrelevant except during the readings, right? Why? Well, levels and zones are what matters. Okay? Number 3, always and always have levels prepared before the CPI reading or PPI. Let's say PPI, CPI readings. Why is that? Well, if you do your technical analysis, if you have your zones, your levels, etc., you will not care when an asset goes to your zone. Okay? You will not care about that. Why? Well, yesterday when we had the PPI, I didn't care when an asset, when Bitcoin could go to this level here that I shorted. I didn't care about that. I posted my my entry three and a half hours before it got triggered. Okay, and I couldn't care less. Maybe it could happen during the PPI, right? 2:30, it's right here. Maybe it could happen like this. Maybe it could happen before. Maybe it could happen afterwards. I did not care because I was very confident in my level and I couldn't care when will my level be triggered. Okay? So these are the key takeaways. Do not enter a trade during the readings. Timing is irrelevant except if we talk about the readings, it's obvious. And levels and zones are what matters. Always and always have levels prepared before the PPI and CPI readings. Now, some of you might ask me, or some of you might already be thinking, well, Phil, if that's the case, why didn't you have this entry here? Well, that's a good question. The first answer is look at the time. It is 4:50 a.m., right? I had a lot of things to do last night. I didn't have a clear setup in this area. Okay, I didn't have a clear setup in this area, and that's why I didn't trade it. And that's fine. That's fine. You can't catch them all. That's completely fine. You can't catch every single trade, every single move, and that's completely normal. Okay? Now let's see if I have maybe missed something. Okay, we have this scalp pool, we have major fib retracement, we have the middle fib retracement. There we go. Okay, let's move these key takeaways here. Let's turn on the 1 hour chart. So where did we reject from? This is interesting. This is one of the fib pulls that I had. It is the first fib level and it is this one, middle fib retracement. So an asset, Bitcoin, retraced to the first fib zone of interest of this pool. This high, this low, right? And that is the only thing there was, in my opinion, in the zone that could be traded, okay? So to me, last night and yesterday, that was not simply enough of a confluence to trade. Yes, I could have shorted that. Yes, we have a beautiful reaction, right? But to me, it wasn't simply enough, okay? And that was the reason I didn't have limit orders there. That's completely normal. So what is happening now? Well, CPI is happening, right? We have a rejection, we have an upwards movement. Now I can bet that all of these people who shorted here and long here will end up being stopped out because they are gamblers, they are not traders. Now let's take a look at the CPI ratings. What do we have? Let's refresh this page. The core CPI was the same as the forecasted. The CPI month to month is a little bit higher than expected or forecasted, and the CPI year to year is a little bit higher than forecasted. Unemployment claims, we see that it is a little bit lower than expected, so I would say this is neutral, right? It's nothing good for the market, it's nothing bad, it is pretty neutral and indecisive. So I can stay here with you for another hour, for another 2 hours, because I like trading, I like looking at the charts, I like living, you know, I like life, and trading is just like life. Sometimes in life you win, sometimes you lose, and that doesn't matter, okay? You can't win all the time and you can't be losing all the time. Just like on the market, right? And how you deal with the loss and how you deal with the victory will reflect on the charts, because how you deal with the loss on the charts and how you deal with the victories on the charts and in trading, that is exactly how you deal with those things in life. It's pretty much the same. So guys, I don't want to lose more of your time. I just want to talk a little bit about these key takeaways, okay? And I want to wrap up this video. I think it is already more than useful. So, what are the key takeaways? Do not enter a trade during the readings. If we exclude that, timing is irrelevant. Sometimes you get the entry before the readings, just like yesterday. Sometimes you get the entry after the readings, right? We don't know. The third key takeaway or point is always have levels prepared before the PPI or CPI readings. Why is that? Well, market is a strange thing, right? It can move wherever it wants, whenever it wants, right? Your job or your responsibility is to be pragmatic, to be objective, and to be prepared for every scenario out there, right? So, once again, people are usually afraid of volatile environments, okay? And it is okay to be afraid, but it is not okay to miss a good trade when you have a good level in which you have a lot of confidence. So yes, I know volatile price movement can look scary, but if you're confident enough, if you have your targets and zones, you shouldn't care, right? You shouldn't care. So let's compare the volatile environment with some sports, some extreme sports, right? For example, you like to jump with a parachute. You've done that 100 times. And then someone comes and says, "Hey Phil, don't jump out of the airplane. It's dangerous. Maybe your parachute will not open." And you say, "Yeah, that's a possibility." But at the same time, you already know that you have done everything you can to secure your parachute so it can open when the time comes, right? It's the same in the market, okay? I know it looks scary. I know it looks fast, right? When an asset moves, it moves pretty fast. But it doesn't matter, because what does matter are the targets and levels, okay? Targets and levels. So when that happens, it doesn't matter. What matters is if that happens or not. So guys, once again, please do not be afraid of volatile environments. Follow these certain rules to avoid being hurt on the market. Okay? Learn from your mistakes. Adapt and overcome. Now, I would like to hear your opinions on this video on trading the volatile environments. Maybe someone disagrees with me, and that's fine. I like to disagree with rational people who can provide me with their arguments, and I can have a good discussion with almost anyone who's at least a little bit sane and rational. So once again, I have had a really nice last 2 days. I have had this profitable trade here. I have explained everything about this trade, okay? This is the last part, or the second part of the video. So if you find any value in my videos, if you find any value in what I'm doing for you, please consider subscribing to my channel, Pragmatic Trading. Please feel free to like this video, to watch other videos too, and of course I appreciate your input. So if you have something to say, if you have any suggestion, any critics or anything, please feel free to leave a comment. I will make sure to read your comment and reply, of course. Besides that, if you want to stay up to date, follow me on Twitter or X. My username is PragmaTrader, and my name is Pragmatic Trading. This is where I post most of my updates. So guys, that's it. I wish you a beautiful day, Okay, I'm sorry, before we finish, we have the dollar index. What's interesting about it? Well, you see this high here and this high here. We are currently sitting on, we're currently sitting on this level of support, which was the level of resistance. And you can see this magic line here, this magic line, right? It is providing us with nice support once again. So if you ask me, the XY or the dollar index could rebound nicely from here. Yes, it can keep going down to the next level of support, structural support, but for now it is bouncing with this CPI readings. So guys, that's everything. I hope you find some value in my videos. I hope you like this volatile video and I hope you enjoyed analyzing with me. I wish you all the best. I wish you a nice and a successful rest of the week, and I might film another video tomorrow if there is need for that. Okay? As always, pragmatic trading, and Phil loves you and wishes you all the best. I'll see you next time. Bye bye.